Good morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 20th of March. Britain and the European Union reach agreement on the transition period. On Monday, Britain and the European Union reached an agreement for a transition period after Brexit. The pound strengthened on confirmation that Britain will continue to be part of the European Union for 21 months until the end of 2020. Under the transition deal, the UK will continue implementing EU rules until the end of 2020. However, the problem with the Irish border remains unsolved. The Republic of Ireland, an EU member state, and the UK, including Northern Ireland, do not seem to agree. This may create further inside pressures in Northern Ireland as the outcome seems to be unsettled. Any further positive headlines could support the GBP and vice versa. Cable jumped yesterday on the news, breaking the 1.4040 resistance level. However, it later subdued somewhat and traded slightly below it. We see the case for the pair to trade in a sideways manner for the next couple of days, with a bearish mood as the financial data due out today could weaken the sterling. On the other hand, the FOMC interest rate decision due out on Wednesday could support the US dollar. Should the bears take the reins, we could see the pair breaking the 1.3915 support level. If the bulls have the upper hand, we could see the pair breaking the 1.4040 resistance line again and aim for the 1.4168 resistance hurdle. G20 meeting kicked off yesterday. The G20 meeting kicked off yesterday at Buenos Aires with main issues being trade protectionism and cryptocurrencies. Europe and other participants seem to urge for a continuance of free trade, while the US seems to set national interests first. The US import tariffs of 25% on steel and 10% on aluminium, set to become effective on March 23rd, seem to dominate discussions. The G20 could be a turning point for the crypto market as investors call for a global coordinated approach to govern it. In 2018, a series of regulatory restrictions and negative advertising have kept cryptocurrencies in a bearish mood. However, BOE's Mark Carney stated yesterday that cryptocurrencies are currently too small of an asset class to pose systemic risks to the financial system, providing a positive note. Euro-dollar strengthened yesterday, testing but not breaking the 1.2355 resistance line. We see the case for the pair to trade in a sideways movement with some bearish tones today, as financial data due out today could weaken the euro. Should the pair find fresh buying orders along its path, we could see it breaking the 1.2355 resistance line and aim for the 1.2495 resistance hurdle. On the other hand, should the pair come under selling interest, we could see it aiming for or even reaching the 1.2230 support line. In today's other economic highlights, in the European session, we get Germany's PPI rate for February, the CEF economic sentiment and current condition indicators for March, as well as Eurozone's preliminary consumer confidence indicator for March. All the above rates and indicators could weaken the euro. We also get UK's inflation data for February, which are forecasted to slow down and could weaken the sterling. From New Zealand, we get the milk auction data for the current week. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Iosif from IronFX, wishing you solid trading.